Good evening, this is Diana Sescalini, and now we're going to talk about Chapter 9 for ACCT776 bookkeeping. So Chapter 9 is from a employer perspective, my payroll accounting from an employer perspective. So I'm the employer, you were the employee. Chapter 8 was the money you made. I paid you the gross wages, but out of your money came taxes that I withheld that I have to pay to the IRS. Now we're going to look at what I have to pay. Let me park myself up here in the corner and let's get started. Hold on a second. Let me get my little laser pointer. So now we're going to be looking at payroll taxes. These are things I, the employer, have to pay. Well, believe it or not, in addition to paying you your gross pay, I have to pay FICA, which is the same thing as Social Security. I match penny for penny. I also have to pay unemployment, both federal and state. And these are called FUTA and SUTA, and that's how you pronounce it. So let's take a look at the FICA first. Let's start on the FICA. So on the FICA, I pay the same percent you do. I pay 6.2% out of my pocket on earnings up to this amount. So we look at the payroll register, and this is the left side. So $1,860 was the total. Well, I'm going to have to pay the same amount of money. So $1,860 times 6.2 would be $660. So this column right here is for each individual employee that comes out of their check, but I have to pay this amount here to the government. This is the total. These are the taxable earnings for Social Security. I said it wrong earlier. These are the taxable earnings. So I have to pay 6.2% of that amount of money. This much was withheld from you. This much comes out of my pocket, and the IRS gets the total of actually 12.4%. Okay? The same with the Medicare. Whatever the Medicare total earnings were, or my total earnings, I've got to pay 1.45%. So you the employees totally paid 1.45%. I pay out of my pocket, and add them together, the government actually gets 2.9%. So let's talk really quickly a moment about self-employment. If you are self-employed, you pay both sides of it. You pay the Social Security from the employee and the employer, and you pay the Medicare from the employee and the employer. So this covers Social Security from an employer's perspective. So next, let's look at FUTA and SUTA. So FUTA is federal unemployment, and my rate is this: 6.2% applied to the cap of $7,000 for each employee per calendar year. So what that means is, once an employee makes more than $7,000 in a calendar year, I no longer have to pay unemployment. If I have pay into a state program, which is SUTA, I get a 5.4% credit. So really I'm paying 6.2 minus 5.4 for just FUTA. And so we're going to go back to the payroll register. So remember I said we'll talk about this unemployment compensation here. So this is my taxable earnings for unemployment. All of these employees have made more than $7,000. So only this employee is subject to me paying tax or FUTA tax. His total earnings were $300, and so $300 is the amount of FUTA taxes I actually have to pay, because all of these employees made more than $7,000. So I'm going to be paying 6.2% minus the 5.4 is only 0.8%. Now let me explain to you something. Let me show you on the next slide. No, let's go back. Sorry. 0.8%, when you turn that to a decimal to calculate it, it's 0.008. Okay? Just make sure you get that. And so all I'm paying is FUTA of $2.40. That's it. Now, SUTA has also a cap of 7,000 and it's 5.4%. So I'm going to look at the register again, and that same 300, because everybody else made over 7,000, that same 300 would be 300 times 5.4%. So my taxes for SUTA are $16.20. So this concludes on how to calculate the employer payroll tax.